Hello there, I'm very pleased to be here, hosted by Bilal. Bilal is the founder and CEO of Carta Capital. He employs very interesting strategies. There's quite a few things that I think we can learn together today. And at the end, we will ask probably what most people are interested, where we're now and where we're heading with the market, right? So thank you very much for hosting us.
You're most welcome.
Yeah. How are we doing?
Very well, thank you.
So can you tell us a little bit about basically about where you're coming from, what you've been doing before, dealing with crypto, and how you get into the crypto, and then about Carta Capital?
Absolutely. So my background is in investment banking. I was an investment banker for over 6 years at a US boutique in London as an emerging markets distressed credit trader. And I think it was that activity in a very illiquid, high yielding and special situations environment that led me to become interested in blockchain and crypto. My interest started in 2015-16, and as I began to research and understand further, I realized, there's something going on here, something to look at. This was obviously occurring right in the middle of the huge quantitative easing and money printing experiment, the modern monetary experiment. Experiment because I think we're finding out how this experiment is ending at this current moment, which we can definitely get into. And I began managing my own funds and funds of those around me within my network in 2016. I had a very small, asset management structure that I was running. When the markets turned in early 2020, and we had the events of March 2020 and beyond of COVID, and then the increase in money printing, I realized that this is really affecting crypto markets, and now is the time to focus on this. Since that time, Carta Capital has aggressively grown its number of strategies. We've grown from 1 strategy to 4 strategies. We've grown from myself managing the single fund to having 4 managing directors on board that manage various aspects of our strategies. And obviously we've relocated from London to guess where? So
Welcome to Dubai.
Yeah, exactly. So we're now managing capital from here. Our client base is growing as interest and awareness and adoption of crypto is growing, which is fantastic to see.
And I think what is very interesting, what attracted my attention in your profile and overall to Carta Capital, that you kind of underscore the non-custodial nature of your relationship with your customers. And I think that makes it quite unique for people who maybe never heard about it, but basically we all know who've been dealing with crypto, right, with the rug pull or whatever, because you are not size of Fidelity yet, right, or of BlackRock. So then people may be uncomfortable with just transferring assets on your balance sheet. So basically, can you just elaborate how does it work?
Oh, you're absolutely right. I mean, considering the size of portfolios that I used to manage and deal with in the hundreds of millions, we are, far away from that at this stage, but we are growing aggressively. And of course, we have our AUM targets that we're looking to hit. You're correct, we have a very interesting non-custodial structure. So Carta Capital never actually holds or controls even a single dollar of our clients' capital. Each client will have their own wallets with their own keys, their own encryption, held by them. We never have access to remove anything from the client's wallets. We simply connect via an API and we implement our strategies inside the client's wallet. I often get asked about these scams and these rug pulls, as you mentioned. People ask me, they say, Bilal, I've heard a lot about these scams and it doesn't feel safe. How do I know you're not going to run away with the money? The answer is quite simple. We never have our clients' capital, so we can't run away with it or do anything nefarious with it. Another key point of Carta Capital is that considering we are founded and managed by ex-investment bankers, we have a very prudent approach to risk management. We only achieve to hit 100% per year.
Which is very decent return, right?
Yeah, I mean, in traditional markets, that's an astronomical return.
Astronomical return, yeah.
It's fantastic, and quite frankly, it seems too good to be true in traditional markets. In crypto, it's very achievable. And in fact, every year since inception, we've been able to achieve our target. This year, 2022, is a very difficult year. We're still hoping and indeed intending to achieve our target, but we will not put our clients' capital at risk in order to chase something which we believe is not there. Capital preservation is very key to Carta Capital.
The best way to make money is not to lose money.
Absolutely, and that's a great saying. Another favorite mentality of mine is time in the markets beats timing the markets. We want to keep our clients exposed to crypto for as long as possible. We're not exposing our clients, quite frankly, to the current drawdowns and contractions in crypto markets. A lot of our clients across our 4 strategies are very heavily, or indeed 100%, in cash via stablecoins. We have some strategies that allow us to make profit for our clients, even in this bearish market scenario, which we can of course go into. But we are very, very protective of our clients' capital.
Okay, that makes sense. So again, right, just to reiterate, right? So basically you have access to the client's money in terms of trading them, but you cannot neither deposit nor withdraw money from, actually not withdraw money from their account. And I think that's what is very interesting about non-custodial solution. So you mentioned that you have several strategies, right? Can you basically elaborate on those? How?
Yeah, absolutely. We have 4 strategies. We have 2 trading and 2 non-trading strategies. Firstly, on the trading side, we have a bespoke discretionary portfolio, whereby I and my team will sit down with each new investor in the asset management structure and understand what is their unique risk-return preferences. What are they seeking to achieve? How long do they foresee being invested for? In light of that, we will, as a team, create a unique portfolio allocation for each specific client. So client A, their portfolio will be very different to client B. It will be selected and comprised out of a basket of around 20 or 25 crypto assets that Carta Capital likes and understands very well, including all of the large caps and blue chips. We will simply adjust the percentage allocation to reflect the client's needs. Also on the trading side, and I should add, that strategy is long only, the bespoke discretion portfolio. It's long only, not using any leverage. Similarly, on the next strategy, the algorithmic investment strategy, it is long only, without leverage, and it is a very rudimentary algorithm, which is designed in-house, led by one of our managing directors, with input from myself and the rest of the team, which uses a series of technical indicators and indeed machine learning technology to continually adapt and improve the trading decisions that the algorithm makes. The algorithm takes a decision on whether to update the client's portfolio every 3 minutes. Doesn't necessarily trade every 3 minutes because we incorporate trading fees into our decision, but it will constantly update the client's portfolio based on the movements in the market from a technical perspective.
Do you override the algorithm, or it's purely basically mechanical strategy?
We have the possibility to override, of course, as a safeguard, but so far we've never had to do that. So far we have been very happy with the way that the algorithm has performed in all market conditions. As I mentioned, both the algorithm and the bespoke discretionary portfolio are long-only strategies. In a bearish market scenario, which we are most definitely in, in a bear market, that can make trading more difficult. But as we said, we are very protective of our clients' capital. We're not seeking to take undue risk. We are evaluating adding a short or a long short possibility to the algorithm, and we are very heavily developing testing and stress testing that in order to, before we introduce it to our clients. This is on the trading side. Allow me to tell you a little bit about our non-trading strategies. We have a DeFi strategy where clients will enter our own Carta Capital platform with their own wallet. They will deposit their crypto in our platform within their own wallet. And on the back end, we will algorithmically move their capital around various lending, yield farming, LP pools, and do all of the rebalancing and the harvesting on behalf of the client in order to achieve the best risk-adjusted return in the DeFi world.
What's the target return of this strategy?
Target return is again 100% annually. We have 3 different levels of risk within the DeFi strategy, and clients can choose their own allocation between that in order to hit whatever return they like. We have one strategy which is just below 100%, we have one which is very close to 100%, and we have one above 100% by 150, 50 and 100. The client can choose whatever balance they want, whatever allocation they want to achieve their own risk-adjusted return. We can of course advise and suggest, but ultimately the decision is that of the client. Evidently, in sensitive market conditions such as now, when DeFi is suffering capital outflows and various sensitivities, we have reduced the return targets on all of those strategies temporarily. And when bullish sentiment returns and confidence returns to the market, we will increase the level of risk that we're willing to take and the returns we want to hit. The final strategy is very interesting in this particular market context. It is a crypto mining strategy. We have physical crypto mining facilities where clients can make an asset-backed investment into our mining strategy. We will, on behalf of the client, purchase crypto mining rigs, which will be allocated to each client with an asset ownership certificate based on a stablecoin transfer to Carter. These belong to the client. These will be integrated and operated within our various crypto mining facilities, and the crypto that is mined goes straight to the wallet of the client. If and when a client chooses to exit the mining strategy, perhaps to shift into some of the other Carter strategies or for other reasons, we will sell the mining rigs on the secondary market on behalf of the investors. Thus, investors will return 60, 70, 80% of the initial capital they paid for the mining rigs. They will receive that back, as well as keeping the coins that they have mined. This strategy, at present moment, is yielding around 20 to 30% per year. In this current market context, that is superb.
I think it is. Yeah, but the thing is that, what do you think about Ethereum too? How will that affect the last strategy? Or?
As we were discussing earlier, we are one of the cryptos that we mine is Ethereum, and at this moment we are projecting and looking forward to the shift from proof of work to proof of stake for Ethereum. I believe this will happen in due course, perhaps later this year. As and when that happens, those machines that were previously mining Ethereum, we can very quickly shift them to mine other cryptos. Not Ethereum, evidently, but we'll still be mining crypto, which will accumulate within the client's wallet. We can even, if the client wishes, set an automatic trade from that crypto into Ethereum, so the client is still receiving Ethereum to their wallet.
Very interesting. And what is the minimum requirement for the investment with Carter Capital?
The minimum investment is $250,000. There is no obligation for investors to be invested in all 4 strategies equally balanced, not at all. Everything is completely dynamic, completely at the wishes of the client. We will of course put our viewpoint and our advisory to the client based on what they tell us, what they want to achieve. But ultimately the choice belongs to the client. We do not charge management fees, 0% management fee. We do charge a performance fee, and we take 25% of profits that we make across all of the strategies. This is paid monthly to Carter, and we do write a report to each client every month stating the performance of their various accounts and requesting payment of the performance fee to Carter. Because, as I said,
you cannot do it yourself, right?
You cannot take the fees, even the performance fee which we are due, that we have made for you, we've made profits for you, even that we cannot take. So we are putting all of our trust in the hands of the client, in that they pay our performance fees.
So I think your interests are perfectly aligned with the interests of the customer, right? So if the customer makes money, you make money. If the customer doesn't make money, you don't make money.
Absolutely. There are many crypto funds that take large management fees, 2% or above. We know that there are mutual funds and active equity funds that charge management fees. We don't do that. We have no interest in holding our clients' capital and not doing anything and just making money off of it. We only make money if the client makes money. Therefore, as you said, our incentives are completely aligned. Furthermore, we do not have any entry or exit costs. We do not charge any redemption fees when clients wish to leave Carter. The only fee that we charge is our performance fee, which, as you know, is rather different to some of the other asset management and fund structures available.
Is there any lock-in period of time, or people can withdraw money when they want?
Absolutely no lockup period. You can leave whenever you like. You do not even have to inform us that you let alone, ask, I want to leave. You can switch off your API and leave whenever you like.
But for the third strategy, for farming strategy, I think is that then you need to unwind some positions, right?
Yes, I mean, we would request to be informed 30 days before the client wishes to leave, in which case we will wind down positions strategically and leave the client in stable coin.
It's in the interest of the customer to give you information, right? Other than
Yes, absolutely. I mean, ultimately, if we are in several live trading positions and the client, for whatever reason, chooses to leave, or they feel the necessity that they need to leave, they can do that. That we cannot prevent them from doing that. All of the power is in the hands of the investor.
It's very interesting. And in the description, I will leave your contact details. So if anyone is interested to contact your company, they can go on your website or contact you directly, right?
Absolutely. We have a core team here in Dubai, UAE, and we have managing directors across Europe in all of the major hubs. So we are contactable 24/7 and available to meet.
Be careful what you say. 24/7.
Yes, well. Yeah. Crypto is 24/7. This market never sleeps. There's no downtime. Public holidays, middle of the night, the movements are happening. So we have to be completely abreast at all times of the market.
And that's a perfect time to ask about what you think about the market, right? As we started from. You several times mentioned that we're actually I think this year was very interesting, not only in crypto, but for all assets. And many interesting things, let's put it this way, happened. So where do you think we are now, and where do you think we're heading to?
I think we are in definitely a very severe bear market. I mean, if we consider that the BTC high was, almost 69,000, we touched 17.5, that's a huge contraction. And this BTC, a lot of altcoins have gone down significantly more than that. However, as a team of ex-bankers, we are extremely cognizant of the wider macroeconomic environment. And when we look around and we see rising interest rates, we see recessionary fears and indeed recessionary reality kicking in, reduced marginal investment and marginal consumption from consumers, it's very bearish for risk assets in general. The S&P 500 is down 25% year to date, roughly. Sorry, Nasdaq's down 25% year to date, S&P down almost 20%, and a number of singular growth stocks are down even more than BTC this year, such as Peloton, Zoom, Snapchat is down a lot, although not quite as much. So we're looking around the entire investment spectrum, macro environment, and seeing very suboptimal conditions for crypto to thrive. I do believe that we are going to see more downside as interest rates continue to rise, as investor sentiment, both retail and institutional, continues to deteriorate and more panic selling enters the market. And when you are a forced seller or a panic seller, what do you always sell first? What is the first step on the ladder? It's your highest risk assets. This is a risk off environment, and crypto definitely fits that description. I foresee that Q1, Q2 2023, we're going to start to see inflation becoming under control after the interest rate increases have taken effect, or indeed the perception of increased interest rates takes effect. By that time, many leading economies, Western economies, will be in technical recession, and central banks will be then required to support growth in the economy and in financial markets as well. When that happens, risk assets such as crypto will thrive again, as they have throughout its life cycle in more dovish macro environments. I'm also looking at adoption, and I'm still witnessing very high numbers of crypto adoption, first-time crypto users, institutions utilizing crypto as a payment rail, institutional investors adopting BTC and other crypto as investable assets, and sovereign countries adopting crypto and BTC as investable assets. As this adoption curve continues to rise precipitously, then my underlying thesis for crypto and Bitcoin is still up. We are not in very favorable wider market conditions, but the underlying fundamentals are still positive. So for that reason, I remain bullish in the long term, and that is the time horizon that most of Carter clients perceive and believe in. For that reason, we're very bullish for the future.
Yeah, so long term, I agree with you. It's quite, I think, bullish outlook, and I think you hit a very important points that I think is that the overall acceptance of crypto is now high, and even in the current condition, every day the new users are coming in. I personally not quite sure about institutions coming into the market, whether short term is a good or bad thing, right? Because actually they may bring volatility with them. But in the short term, I think what I hear from you, you're still quite bearish, right? What kind of levels do you think we can still see for Bitcoin, for Ethereum, and where you think people have to start getting in aggressively?
Well, firstly, I would say now, current valuation is an excellent point to enter the market. I mean, not many people would have said that sub $20,000 Bitcoin was on the agenda, or sub $1,000 Ethereum was on the agenda 12 months ago. We are at those levels now, and if you're a long-term minded individual looking at a 3 to 5 year time horizon, now is a superb time to enter. However, as prudent asset managers, we do foresee more downside. I'm looking at 14K BTC as a target and 650 ETH as a target. For some of the other alts, it's even further contraction to the downside. We're not looking to time the absolute bottom or catch the absolute bottom. Of course, we have our targets where we will be acquiring crypto on the way down. But I'm looking for a very obvious, clean and clear change in the macro and monetary paradigm and a very clear divergence in the bearish trend to the upside on the cryptos we watch. And at that point, we'll be deploying very heavily into the markets. As I mentioned, most of our clients are completely in stablecoin at the moment, and they are very comfortable waiting it out in order to enter at the optimal moment.
Good things come to those who wait, right?
Yes, indeed.
But one viewer asked me about potential risk of forced deleverage, which levels you do on-chain analysis and so on. Do you see any levels if Bitcoin will hit, there could be some further falls through, and is there any risk of, let's say for example, Bitcoin goes to 14,000, how much deleverage you will see on the level there, and if we go through, is there any chances we'll keep going down because of more and more conservative investment become deleveraged?
Yeah, you're discussing, forced liquidations, and there are very large institutional and very public and loud holders of BTC, not to name any names. And there are, of course, rumors abound about their pain thresholds and liquidation points. I should add that we've seen, major crypto hedge funds blow up in the last, few weeks, and probably we will see more of that, where institutional investors have been overexposed to potential downside. I can give you my ideas of where certain liquidation levels are. I think 14K is an important level. I think 10K BTC is a very important level, also a very huge psychological level. If certain institutions are exposed at these levels, you will see, huge amounts of panic as that news permeates the market, and possibly, very large downside wicks on a daily time frame. But when I look at the volume profile, when I look at historical buy zones of BTC, I do see very large, willing spot market buyers willing to come in at that point to support markets. So I'm not so worried about complete capitulation beyond that, or certainly sustained capitulation. There could be, some very intense few days, as we had in the last few months, as the market suffers these shock events and institutional capitulations. But I believe that there are, very strong hodlers and BTC believers that will come in at those levels. to support markets.
And the last question, we talked a lot about BTC, a little bit about Ethereum. For the viewers, any other crypto, because everything was hammered so badly, right? Any other crypto that you think that are interesting for people to look at?
Yeah, there's over 19,000 cryptocurrencies out there. For me, I don't track or follow that many.
But which one are you looking at?
Yeah. I mean, I really like native exchange tokens. I look at the way that the native exchange tokens of some of the largest platforms have performed in the last bull run. I still see them as being major players and components in the market. I mean, let's be honest, a lot of our viewers, these are the crypto entities that they engage with. They don't necessarily engage with DeFi or NFTs or the metaverse or even the funds out there. They go to their favorite exchange and they interact and they purchase their crypto. So this is the conduit, the on-ramp for many people into the crypto world. So having exposure there across a basket of the leading native exchange tokens would be a good idea. And there are also extremely innovative and functional layer ones outside of ETH and BTC that people can look at. I really like Avalanche with their tri-chain, their three-chain system, allowing for different usability across each chain.
Subnets also.
And the subnets are there as well. I really like Polkadot and the possibility for parachains on that side. There are some very strong innovations there. There are the possibilities of some very high levels of transaction processing per second on chains such as Solana and others, although Solana is having some very documented problems at the moment, which is normal for an innovative technology. For something which is pushing the boundaries of what is possible technologically, that has to be expected. So we are tracking all of these from a fundamental perspective, from the latest news and technical developments that these projects are coming out with. And we are constantly refining and reviewing our investment allocation strategy for when the macro headwinds are behind us again.
Perfect. Thank you, Bilal. Thank you for your time.
Thank you.
Real pleasure.
Thank you so
Thanks
much.
a lot. Thank you.